Per usual, we on this channel for educational purposes only and is not intended as financial advice. Firstly, some quick housekeeping. I've opened up a Discord, should you be so interested in joining. It's free, everything's free. And if you want to connect your YouTube account to Discord or your YouTube account to the subscriber checker bot in the Discord, you'll get special roles depending on if you're a member or a sub. And if you want to do neither of those things, but want those roles, let me know. And if you want to do neither of those things and just want to be in the Discord and lurk and say nothing, that's fine too. No pressure. The link for the Discord will be in the description of this video. And it's already been quite the little day we've had here on Sunday, past the weekend, through the weekend. The biggest thing I think that's on everybody's radar is gold finally hit an all-time high 3,000 million years later. That's kind of the theme for everything here, okay? S&P almost at an all-time high, gold's at an all-time high, NASDAQ almost at an all-time high. I'll talk about this at the very end, but all these legacy charts look great. So I'm not going to say the D word, I'm not going to say doomers, but you got to just drown them out, okay? Because right now, I don't see reason to be bearish. And if anything, they're helping fuel everything higher by still being bearish and shorting and saying, you know, this is a bull trap or whatever. I don't even know at this point. I mean, I've seen and heard people that are still bearish somehow. I mean, sure, like, I guess we get a random 10% down day, come back to where we were when they started being bearish 2 weeks ago, and then keep going. I don't know what to say. If we look at the heat map for Bitcoin on a monthly basis, one thing that many people at this point have pointed out already is that if November has been positive or negative, December, the following month, has been positive or negative. It is always matched, not always, but since 2015, it's matched the previous month. This year was positive. So we've got not only just end of year seasonality on our side, historically, we've also got this November, December coupling on our side here. And while we're on looking to Bitcoin, just a quick spot check. I'm not going to go through what these exactly mean or are, but Pi cycle top, plenty of room, not even close yet. And if you're ever curious, you can go to look into Bitcoin and they'll give you a full rundown on what these indicators are. 200 WMA looks fine as well. Again, we want to stay semi-close to the 200 moving average until the very end. You know, if we zoom all the way out, you can see that typically what we've seen historically is we're just way overbought relative to the 200-week moving average. This is just another way of saying we have plenty of room. And you're going to hear me say that a lot in this video, including MVRV, which is just market cap relative to on-chain cost basis, basically. And when there's too much unrealized profit in the ecosystem, that's usually the top. You know, too much being there's a lot of people who haven't moved coins yet on-chain, and that's when MVRV spikes. So we've paid our dues here in the negative zone at the bottom of the bear market, as we have every single other bear market. We may still revisit this zone. A lot of people comparing this to the COVID low yet to come, right? Call it some sort of flash crash, whatever you want to call it, whether that be pre or post halving, like the Bitfinex hack in 2016 was post halving. But if we, during this run, get back into this MVRV below zero zone, which is extremely unlikely, but if we do, for me, that's an excellent buying opportunity. Bitcoin dominance continues to push higher, as you'd expect at this point. It has a weekly cloud breakout for whatever that means, right? It's certainly not bearish based on the range it's held from 21 to 23. Looking at fib extensions, it's getting towards a reasonable TA target. Doesn't mean it can't keep going beyond 57, but it'll be interesting if alts start to wake up around that level and dominance as some sort of local top or peak around 57. We'll see. We don't know until an ETF's live and we got flows or no flows, right? I mean, this dominance could go to 77. It doesn't matter, but it's certainly still bullish on the weekly and just tells you in general, much like this chart, broadly, alts not the place to be for an extended period of time. Some alts still look incredible as far as what they could perform in the cycle. Some alts have done well on like an intra-week or very, very low time frame basis. You know, they've, like Rune, for example, has moved towards continuation and higher highs. But broadly, as an alt BTC pair, we're continuing to see weakness, resistance, potentially lower lows here. So my whole mindset for me is around the ETF, because my assumptions are we will see some of what we're seeing now, which is just continued upward accumulation into the announcement. The announcement itself, to me, is probably likely going to be a buy the rumor, sell the news. The actual launch of the products weeks later is where we pick up that recovery. And relative to when that happens to halving, that's also a big deal for alts. So some fun news catalysts to play in between now and the Bitcoin halving. That isn't to say there aren't plenty of alts you could just rotate into early, right? And just say, you know what, Bitcoin's old tech, whatever, give me those 10Xs, right? Plenty of people already doing that, obviously. But broadly, this index just telling you, again, not the place to be relative to Bitcoin. Power law corridor, again, plenty of room. Let's pick the tops. It was created in 2018. Didn't do so hot in 21 or 22. We'll see, right? We'll see if we can vindicate ourselves. It's a number. It's on the chart. It's 280. Don't give me hate mail. It's just an indicator. There's also the 2-year moving average. Plenty of room. 2-year moving average multiplier. Sorry. You've got the 2-year moving average, the 730 moving average in the green. When we're below that, that has typically been excellent accumulation periods. When we start to creep above the 2-year moving average multiplier, that's when we are effectively overbought. Currently, that's somewhere around 140. If this is a slower trend like 2016, 2017, that'll continue to creep up. Even in 2021, this eventually, the multiplier eventually creeped up. So I like 140 as another ceiling, right? Using all these indicators together, pi cycle top, MVRV, power law, you can sort of fit the pieces together. We've got 280 here. We've got 140. That's a massive range, right? So we'll see what it ends up being, but so far so good. Weekly cloud, I think a lot of people at this point hopefully have been convinced the cloud is the real deal. Every time I don't have the conviction to take the trades the cloud tells me to take, I get upset, inevitably. That wasn't the case this time, but it's always just a good reminder. There's a reason the cloud is king. And it told you down here that the edge to edge was starting. And at this point, we're almost there. Certainly expect 42 by the end of the year. You may immediately notice we have 7 green candles here on the weekly. Also extremely unusual. So we are entering, admittedly, be careful territory. Like I said on Friday, cautiously optimistic. Still optimistic, okay? But eventually, this is probably going to retrace. I just think you got to ride this until it looks ugly on lower time frames. It is a bit of a signal, as you'll see me going down to the 4-hour, looking for trade setups, that we're getting to a point, we're closely getting there, we're inching closer, right? Because if you're going from the weekly to the daily, to the 4-hour, to the 1-hour, to the 15-minute, during the course of a trend, typically that means you're getting closer and closer to a pullback, right? Even if you, just back to the cloud for a second, even if you open an edge to edge here, you're still fine, right? You're still up. So anyway, cloud is great for anyone who doesn't already know that. Now, the next question that everyone's been asking me is, okay, what do we do now, right? Do we get to 42? Probably. Do we get past 42? Maybe. How much past 42? 47, 48? Do we get to 50? Probably not. Let's say we close some from 42 to 47. Great, then what? My response has been, well, we kind of have to wait and see what it looks like. My assumption here is we're going to sort of lose momentum between 42 and 47 and or consolidate, form a pattern that is suggestive of a reversal. Now, the most ugly thing would be 42 to the other edge of the cloud, which is at 26. So from a trading perspective, I would love that. We already have legacy bros who absolutely hate us and continue to hate us and continue to say, like, this is Fugazi nonsense. So they would double down at 26, and then we would potentially, take off after the ETF is live. I think if you have a long time horizon, all this is noise. Like, it doesn't even matter. But if you're trading within the next 3 to 6 months, I think it's obviously very important nailing this, because let's say you let go of some between 42 and 47 and we don't get a dip. We just keep going, right? I don't think that's likely, but that is something to think about, right? If I'm wrong, you, me, whoever, about 42 to 47, then what, right? Then what do you do? So I think the right way to work around that is to massage what exactly you're doing with your spot sales or your leverage trading, right? Or you're just sitting it out, enjoying the entertainment, right? As long as you have your plan and don't like panic sell or panic buy at 48 or something, then I think you'll be okay. We were talking about relative to the pre-halving year and what those clouds looked like relative to today. So you'll notice 2016, we peaked above the cloud, retraced. 2019 peaked above the cloud, retraced. This was the Bitfinex hack, that wick to the Kijun on the weekly. This was COVID, obviously. So again, my assumption here is we will not have the momentum to make an all-time high retest. That's my assumption. Ideally, we get a little bit of this doomer recession stuff to help us retrace a little bit into the new year. Part of thinking about this is like, what could happen to lead to the path, the route down, you know? I still see people shorting, so that gives me hope that we keep going. So until the people who are shorting say, all right, you know, bulls, you're right, I was wrong. You know, by that time, we're going to be at 45 plus. Anyway, so this is the edge to edge target and just beyond. You can measure that slightly differently. If you just turn on the fibs, take the high to the bear market low for each pre-halving year, and you get the 618 fib. So somewhere between 42, 49, again, makes the most sense to me as far as where we would find resistance in a big way. But if in fact we wait till January to approve the ETFs and we are already at 49, you know, we just kind of have to game theory that out a little bit. So we'll see. But I do like just sitting here today, 42 to 47. Here's another way to look at that. You've got the pitchfork. There's no VPVR resistance up here, which leads me to believe, yeah, you know what? We probably could get closer to 47. There's certainly no pivot up here. I don't think we get to 60, right? It's not like I'm in a rush to close anything either. So, you know, I don't think we're going to need like 30 seconds to make a decision here. We're going to have time. So starting with a multi-branched decision tree and then pruning those branches as we get closer makes the most sense to me. So at this point, anything's possible. Sure. All-time high retests. Don't think it'll happen. 47, maybe. 42, definitely. We'll see what happens, right? And all that, of course, relative to the ETF announcement, which should be in January based on the people that know better as far as when the bureaucracy lines up to approve such products. If you look at the daily cloud, we've effectively nullified that TKC clamp, which all those tell you is momentum is flat, right? You can look at July, you can look at even August, September, October. When you go flat and the TK lines go flat, it typically means you're set for a mean reversion. Before the move higher, the mean reversion was 32. Now with the move higher, we're not only higher, but we are painting a candlestick pattern called the 3 white soldiers, which I did not name. That is the name it was given. And we're working on our 4th white soldier. So this typically means very strong bullish continuation. Again, no weakness yet. Doesn't mean we won't get a candle this week that retraces us all the way to 38, you know, but as we sit here today, this continues to look really good. This is getting a little parabolic, right? A little parabolic. We're outside of that old multi-week channel at this point, and we're starting to get a little bit squirrely up here. You know, I think, I don't know if I have, yeah, okay. So here's the 4 hour, and we don't have a 4 hour div on RSI yet. We are well within the lower time frame ascending triangle that we were building into the yearly pivot, which another win for the pivots, by the way. As soon as we got above that, it was game time. We held above the 4 hour cloud for most of the consolidation period, and we don't have any fractals yet. So again, this is kind of telling us things are speeding up here, reaching a logical conclusion relatively soonish, within the next 2 weeks, I would imagine. I don't think we have another 2 green weeks in us, but I guess we'll find out, won't we? So things to watch, definitely a 4 hour div and any chart pattern up here that may form. I mean, the last chart pattern took a little under a month. So I'd expect the next chart pattern that actually matters to take even less than that, right? Because if things are actually speeding up, you know, slowly speeding up, it's speeding up. The stuff on the lower time frames will start to matter a little bit more. But so far, so good for Bitcoin. For ETH, this is a rainbow chart. I mean, there's tons of different versions of these around the internet for Bitcoin and ETH and everything else, just because I know a lot of people are asking about longer term ETH targets. I like 10K just as like a shoot from the hip target from here. Certainly well within the rainbow. You can also use the 2-year moving average multiplier. You have to bump it down a time frame because ETH doesn't have that much trading history. So this is effectively, it's the 365 instead of the 730. So the green is the 1-year moving average, and 5x the multiplier at the top there. Has been pretty good. You don't have as many data points to back you up here, but again, this is pointing towards 10K eventually-ish as a logical conclusion for the cycle. ETH finally, on lower time frames, broke out of its multi-month ascending triangle. Finally, edge to edge also on your side here above volume resistance. So again, the targets for this 26 to 31 make total sense to me. 36 if things get exciting. But if BTC is doing well, eventually everything else on the USD side tends to pull up. I'm still just as bearish on ETH BTC. This should eventually just go down just based on flows, right? There's nothing else other than flows. Bitcoin's getting the first ETF, assuming flows are positive. It's post-halving, right? That's it. We can argue fundamentals, but this should eventually continue to flow down. If I'm wrong, we'll be back above the weekly cloud. You can see how we've done post-Bitcoin halving in 2016 and in 2020. I think this was the Dow hack, right? 2016. So I don't think it's going to look that ugly, but 037, perfectly reasonable. We've had some stablecoin prints for Tether. USDC seems to have stabilized here. There hasn't been any weirdness relative to the Binance stuff. So we are getting our own little, liquidity injection party. And there are a ton of charts, which I'll save for Wednesday on the alt side. Zcash, not really one of them, is just sort of on here. If Zcash is pulling up, okay, then that just tells you that this isn't your run-of-the-mill move. Okay, this is broadly risk-on, meme, stonkery, alt-seasonry type stuff. Some of the early movers continue to look good. Sol, Link, AVAX getting towards its weekly cloud. SNX closing in its weekly cloud. Aave looks good. EOS looks horrible, continues to look horrible, but just as a flavor for what you might see, right, I would prefer to wait on entries in things like DOT, Zcash, EOS, even AVAX at this point, much preferring entries into charts like Aave, SNX. Cardano isn't on here, but Cardano is another great looking weekly edge to edge. So there's something for everybody. It's hard to go wrong here unless you're shorting, which Godspeed, soldier, if you're shorting. GBTC hit its edge to edge on Friday. This probably gaps up on Monday when it opens at 9:30. Also out of its multi-month channel here to the top side. I think this is getting a little bit overbought. But again, relative to ETF news, that's important. Is GBTC in the pack of the first approved ETFs? What does that conversion look like? The discount's somewhere around 8.5% right now. So this trade is starting to wind down, I think. And then I think we can all just put it behind us. I don't think their fees are going to be lower than BlackRock, but we'll see. ETHE, on the other hand, has some room. Still looks okay. Also has a slightly larger discount relative to GBTC, so there's some relative value there that could be fun to play for the next couple months. BITW also has around a 25% discount still. It is mainly Bitcoin and ETH, but has a bunch of other stuff in it. Also well on its way through the cloud there. GDLC, same thing. It's a basket, mostly Bitcoin and ETH. Has a 38 edge to edge, maybe 1920, right? But this also has looked very good. What I'm assuming is once GBTC converts or closes on the discount, people are going to be looking for other stuff, right? They're going to be looking for other success stories potentially based on those discounts. Those discounts may close on these products in that time period, but again, if you're looking for stuff, these are options. Even WGMI, the mining ETF, looks phenomenal. CleanSpark, 22% positive on Friday, just wild numbers. So I do think we're seeing money coming in, kind of looking around broadly at everything, saying what looks good, relative value basis relative to Bitcoin. what's not Bitcoin that I can touch. I mean, coin is another example, right? That thing is absolutely rocketed up. MSTR, same thing. So all this stuff looks really, really good. And let's transition to legacy for a second. I'll talk more about legacy in Macro Monday, but one thing to watch out for is markets have really been enjoying inflation on CPI coming down. CPI's 6-month lagging. Housing component has really meant that trueflation has been the better real-time indicator. Now, trueflation has started to perk up here and is sitting and hovering and ranging around 3%. Definitely not the target the Fed wants. As many have already said, the Fed may eventually have to say, you know what, we're actually targeting a range now, not 2%. If that happens, that should be super bullish for risk assets. Hasn't happened yet, something to watch out for. Something else to watch for is, does this actually keep going up? Okay, we don't want it to go up. Nobody wants inflation to go up. But if trueflation leads CPI, because it is a real-time indicator, you'll know ahead of time, right? We know what to look for. We knew what to look for on trueflation in 2021 and 2022. So that's definitely something to keep in your back pocket. Now, PCE, the Fed's preferred measure of inflation, much like mitochondria is the powerhouse of the cell. You'll hear people say PCE is the Fed's preferred measure of inflation. Has come down considerably. Markets went wild on that, assuming that the Fed is not going to keep hiking. Fed rate probabilities absolutely plummeted on the news. The market has been wrong on this for years, okay? So don't take this literally, take it with a grain of salt, but markets are betting that the Fed's going to cut aggressively and soon, and it's not actually going to be higher for longer. What I think is more important is reverse repo, which is down considerably, down to 768 billion. I'm not going to explain this, but imagine it's this outside pool of capital that is getting overnight rates and is now moving that to longer term rates, locking in the current rates. In effect, this has sort of allowed the government to issue debt without much consequence. Yields have come down, bond prices have come up, and it's been a little bumpy so far on the auctions, but it's been okay. So what happens when this runs out? And a lot of people have been pointing out that US liquidity is actually rising. And I think what they're really seeing is the reverse repo getting drained. So we have, again, 768 billion left to go in the liquidity pump, in the liquidity spigot. And then what happens? Does the Fed switch from QT to QE? Do yields go insane? Do we have yield curve control? Like how wild does it get, right? And looking at Bitcoin halvings just as a sort of automatic thing to watch here. If we get another liquidity jump into the Bitcoin halving, that should be massively bullish for Bitcoin in 2024 and 2025. Gold's made an all-time high, finally. As many people have pointed out, there's no such thing as triple tops, and they were right. There's no such thing as quadruple tops either. There is a decade-long cup and handle here. There's a multi-year inverted head and shoulders, potentially an ugly-looking one, but it's there. So depending on what you want to measure and how you want to measure it, there are no bearish targets here. We're at all-time highs. What is there to be bearish about? We had a pretty ugly rejection today so far, but this looks phenomenal, right? The best it's looked in probably since 2019. Looks great. TLT has pulled up, like I said. This was the edge-to-edge move I've been pointing out. So even TLT looks good. The question, again, I have is, what is TLT going to look like once we drain reverse repo and once we don't have that extra buffer of kind of free cash that is not being ripped out of risk assets? And again, with any edge-to-edge move, the expectation isn't continuation automatically. It's probably some sort of consolidation, probably some sort of ugly mess. That's the expectation until the cloud flips bullish here on TLT, if it flips bullish. S&P, man, again, people are just so bearish still. Look, this is our first rate hike, okay, in 22. We are 8% above the Fed's first hike. Everyone who was bearish for the entire year has quadrupled down on their bearishness and has just said, you know what, the fundamentals, it's all about the fundamentals, okay? Look, you can have a viewpoint. You can think this world's going to hell in a handbasket, but you're going to get left behind, okay? Because the market doesn't care. And eventually the bears will be right, eventually. And what is that going to mean? Are we going to be moving from 5,200 to 4,600? right? Like what is their move going to look like? Are they expecting a COVID move? Anyway, we're above the daily cloud. We're above the 200-day moving average, obviously. There's a growing overbought signal here on the TK lines, but it's also a massive cup and handle on the S&P. So I would love to see this reconsolidate up here at 4,500. The Qs as well, same thing. Looks great, looks phenomenal, looks ready for all-time highs. And hopefully the bears just get more bearish. Every tick higher we go, and that'll just fuel us higher. And again, back to this idea of meme stonks. Like, look, the ARK basket, sorry, it's full of meme stonkery, and it's done phenomenal in the last month, setting itself up for inverted head and shoulders, edge to edge, same type stuff. So all this stuff is just ripping. Even regional banks, okay, double bottom, looks great. Not something I trade, but even the regional banks ETF is indicating that the kids are going to be all right and rates are going to come down eventually soonish. And the rate sensitive businesses aren't going to literally go to -0, 10,000 million billion. And look at the IWM. Small caps, the most rate sensitive businesses, also got super excited with the assumption that rates are coming down. So I don't think it's unusual that Bitcoin has a tailwind. Everything has a tailwind right now. Everything is looking phenomenal. Liquidity's up, right? Everything, we're checking all the boxes. I didn't talk about oil, but oil's still down a lot. And if I had a chart of the week, it would have to be this one, because again, what do we do around 42 to 49? It certainly feels like we have the juice to keep pushing, at least to around those levels. So we'll see. That's all for this one. Like, dislike, comment, share, send this to your neighbor. Give me a comment below. Happy trading.